What's a lifestyle business?
Yeah, it's such an interesting term. I think when people think about the types of businesses that you can build and like the direction that you want to take it, it's really thinking about how big of a business do you want to build and kind of like the rules that you want to play by when you're building that business. It's also who do you want to be reporting to. So when you take on an investment, and so you go the venture scale route, you're thinking about building a very large company. Again, that like $1 billion kind of exit outcome, lots of transactions, fast growth in a very short period of time. But you also have now all of these other stakeholders. So you have your customers, and any business, the customer will always be like kind of the number one stakeholder. But now you have investors, you have board members, you have other people that are kind of dictating what you should and shouldn't be doing with your business, giving you advice. But they also have an ownership claim in your company. Like you've given up equity for exchange for that investment.
Right.
You are no longer the sole owner of that company. So other people, their thoughts and opinions matter. You could get fired from your role as the founder of the company if you don't have enough control, right?
Yeah. Hey, what's going on, everybody? Welcome to the 9% Show. I am your host, Steven Burton. And here at the 9%, y'all already know we keep everything 100. If I haven't done it, not doing it, not about to do it, it will not come out my mouth. So here we are for another episode. Matter of fact, hold up. Before we get into this great episode, make sure y'all like and subscribe and all that good stuff. Shout out to my people on Instagram too. I think by the time this come out, we're gonna reach over 2,000 followers on Instagram. We just need y'all to come over to this YouTube channel and like and subscribe over here too. So please continue to do that, okay? Please continue to do that. But let's get on to this episode that we have today, okay? Today we are gonna be talking about venture capital, startups, the startup culture, founders, all that good, sexy stuff you hear about while you're chasing your dreams and you want to get your $1 million check. We have all the information for you in this episode. So trust me, it is going down. And we have a special guest for this episode. We have Miki Reynolds, who is the head of programs at Slauson Co, an early stage venture capital firm where she leads the Friends and Family Accelerator. Prior to this Slauson Co, she was the CEO and co-founder of Grid110, which I was a proud gritty of, but we're going to talk about that in a second. An award-winning nonprofit providing free entrepreneur programs to over 350 companies led by underrepresented founders in partnerships with the city of Los Angeles. So that was a lot to get out, but Miki, welcome to the show. Thank you so much for being here.
Thank you for having me.
It is my pleasure. And like I said, let me just first get it out there. Like Grid110 changed my life, like in a major way. So Grid110 is an accelerator program, and I'm gonna let you get your introductions in and stuff, but I just want to give you your flowers first.
Appreciate it. Because
like I found Grid110, I think I was like 2 years into the business. No, time is flying. Oh my gosh. I don't know when it was, like 2019, I think, maybe 2018. And it was very lonely and hard. And it was like to find a program that people like believed in me more than I believed in myself. And also like that I was like able to be around other founders and other business owners that go through the same problems as me. And it was just like so refreshing to just bounce ideas off of somebody else that's out there. And it was just so great. The program was so great. And it's still a network that I have to this day. And I can always reach out to you or anybody that's connected to it. So so thank you so much for Grid110 and
you are so welcome.
You did for me. So, but let's just kind of dive into it. And like, I guess maybe we could start off, telling a little bit about yourself, specifically like, what kind of led you to, and for those that don't know, you will find out that like you are super driven into the founders and you have such a passion for startups and like what part of your journey like led you to that? That's what I'm like really interested in as far as but you can start as far as back if you like.
Yeah, no, it's an interesting journey and it's definitely something that I did not plan out for myself, but looking back, it all kind of makes sense and the dots connect somehow. So California born and raised, from the Bay Area originally. I moved to LA to go to UCLA and I just stayed ever since. I think we're about the same age, born in the 80s, right?
Oh, yeah.
So we grew up with the age of the internet, like AOL, and was very fascinated with the access that technology and like the digital world gave you, like people, resources, just learning about the world. And I knew when I went to college that I wanted to do something in that space. And so I remember getting into college and like in the dorm rooms, we had high-speed internet for the first time and like Napster, and everybody's downloading free music overnight. But it was just like this really crazy phenomenon of what you get access to just by clicking a couple keys. And I knew I wanted to do something in that space. I just didn't know what it was. I don't know that I understood the concept of entrepreneurs or startups back then. I don't like today every campus has, startup clubs and programs and accelerators and classes that you can study entrepreneurship. And I don't think that we had that back then. Right. So I don't know that there was something that I was even aware of, but I was very fascinated by technology, like what Apple had been able to do and Steve Jobs. And I knew I wanted to be in that space, but I didn't know what that looked like for me. So I started my career actually in entertainment, similar to you.
Oh, wow.
I worked for the movie studios, and I worked in digital marketing there. So I was on the online teams, kind of helping to promote theatrical releases, back then DVD releases, all through like the digital realm. So whether that was through email marketing, through kind of online websites and things like that, and just learning as much as I could, getting my hands dirty. I was responsible for sending out all of our email campaigns, and I didn't know like HTML or coding or design or anything like that. But to shortcut around if I needed to edit something or change something, instead of having to send it back to a developer or designer, I just learned how to hack it myself. And so just learning kind of stacking skills along the way was how I got more into the technology space. And so got into more like managing projects, software applications, and just anything that really like didn't exist before, and it was the opportunity to build something new. So for the first kind of half of my career, I was building things for other people, learned a lot, and got more kind of technical, working with more developers, designers, really just being able to translate languages between, a salesperson, a client, a stakeholder, and the people that got shit done. And that was actually one of my titles, was the VP of GSD. Because I was just the person, again, like making the connections, figuring out how to get things done, keeping the timelines, very type A, very detail oriented. So for the first half of my career, it was doing things like that. But I was working on things and building things that I wasn't necessarily excited about. Didn't really feel fulfilled by the work. So that kind of led me to a transition of wanting to find things that maybe were more mission and values aligned, things that I got more fulfillment out of. And I think in particular, being a woman in tech, being a woman of color in tech, didn't really see many of me in spaces like executive teams, in leadership. I've always had a male boss. I'd never worked for a woman. And I wanted to bring more women and people of color into those spaces. So the last 10 years of my career, I've really been focused around access to opportunity. And that was whether that was bringing people who maybe were non-technical, and getting them, helping them break into tech, or leveling up into tech. So I used to work for a tech education school called General Assembly, where we taught coding and design and things like that. And it was mostly for people who were trying to break into like the tech and startup space, but didn't study computer science in college, and wanted to get these high-paying jobs. And then at the same time, it was like thinking about how do we make these spaces, again, more diverse. And then it was looking at the entrepreneurs and the founders and the people that are starting these businesses. And if they themselves are diverse, they're more likely to hire diverse talent. And so that's when Grid110, the organization that I co-founded, was really kind of narrowing in on how do we help more entrepreneurs start their businesses, be successful in growing their businesses, sustain their businesses, so that they can be part of that 9% club, right? And so it was giving them the free resources and tools and community that they needed to be able to survive.
Well, actually, I always get so excited about the show that I always forget my toast here. Sorry guys. But we like to toast to the 9% and also those that want to get into the 9% club. And thank you so much, Miki, for being here. Cheers. All right. I always got my scotch and ginger. I always say once they cut a check, I'll let them know what it is exactly. But speaking of Grid110, I mean, like, so I know that was just like a little Cliff Notes version. I'm sure there was a lot of roller coasters up and down. Life is lifing. But like, what did that even look like to start Grid110? Like, I mean, I see the overall goals with it, but how did you even know? Because that's a big jump from, it sounds like the corporate life to like starting a program like that, and then to even have the support to give founders. Like, how did that all kind of come together?
You're right about the Cliff Notes version, because in the middle of that included a layoff, a company shut down, trying to figure out what the fuck am I doing with my life? What am I doing next? And so again, I can tell the story and it kind of makes sense, like looking back on it now. But there was definitely a period of time where that like first 10 years of my life, there was a abrupt end to it because the company I was working at shut down and we had to lay off the entire team. And I'd been there for 6 years, and there was just a lot of like emotions that kind of went into that. So kind of like the grieving process of losing that business. It wasn't my business, but I'd helped really kind of rebuild it from the ground up and help build the team, and felt very connected to it. But it was, I think, then that was where I was the VP of GSD. But there were just certain things that I didn't know about. I didn't know about our financial situation. I didn't know, there were just things that I should have asked more about to understand, so that this shouldn't have been a surprise to me. And so then it was like, okay, how do I pick myself up and move forward? What do I want to do next? I could do the same thing as basically, managing software projects, but again, not a lot of fulfillment in the work that I was doing. And I remember getting a interview from like a technical staffing agency to land me a 9-month contract on this like financial services backend like project build. And it would pay me the exact same money that I was making before, which would have been great. But I thought about it and I'm like, I don't want to do this. And I didn't have any other options at the time, but I just knew that this isn't what I want to do. And I had like a little bit of runway, like this is how much I'd worked. We didn't get any severance because when the company shut down, we basically ran out of money. But I had banked 30 days of vacation because I never took time off. And so that was my severance. So I had like a little bit of time and a little bit of savings to kind of figure out something next. So I picked up a part-time consulting gig actually in the e-commerce space. And I was helping a hair extensions company migrate from the e-commerce platform that they were using to another one, while I was trying to figure out what do I want to do next. And it was really in that space of let me explore, let me kind of go to these different co-working spaces that are opening up. I live in downtown LA. And at the time, downtown was going through this like emergence, like renaissance. It was becoming a place where people wanted to live, work, and play. It just like had a lot of things going on. And I wanted to find work closer to there, but I didn't know where to go. There weren't like events that were happening. There wasn't like community. I knew I could go to Santa Monica, like the west side of Los Angeles, where most of the startup and tech ecosystem is, and there's a lot going on there. But as you know, Los Angeles being so large, like getting across town, it could take you forever. And I just didn't want to commute. And I was just really trying to figure out how can I find my people that are closer to home here. And I looked and just like couldn't find them. And so kind of the starting point for Grid was connecting with people who felt very similarly about downtown LA being the next startup hub for people. We knew that there's like all these different elements that were there to build some sort of a platform for bringing entrepreneurs together, providing them with resources. We weren't really sure where to start. So a lot of it was just talking to a bunch of different people and like, what do you need as an entrepreneur? What are the opportunities that are here? A lot of just like fact finding and problem solving, which is what you should do as an entrepreneur, as someone starting a business. It's like, what is missing? What do you need? What is the problem that's really like that needs to be solved? And what are potential solutions to that problem? So we never thought like Accelerator wasn't the thing that we set out to do, but it was like the solution to the problem that we kind of uncovered, which was we actually started solving the wrong problem, but how we went about it and kind of just like trying things, talking to people, launching something and kind of iterating on it. And I think it was just like an evolution process to get to where it is today.
Which is interesting. It's almost like, I tell people all the time, like with Perfect Tux, like I literally found out like my target audience or like my niche after like 12,000 customers. And it's a good problem to have. Don't get me wrong. But then you hear, start a business, find a problem you have, and it's all good, sound good. Find a problem and this and attack that. But like literally my thing was like, okay, I need to make money as soon as possible and I need to get in front of customers. Like business is business. I'll buy for $1, sell for $2. And then I was like, afterwards, I found out like, oh, this is why I'm doing well. This is why people like me. And I was able to, adjust it that way. But it's almost like how you say you didn't necessarily know exactly how what Grid110 eventually turned into. Like and it's nothing wrong with, like, it's okay for some people, like, don't bang your head against the wall just because you're, I don't know, maybe, I mean, I might be saying the wrong things. I mean, I keep it 100, but like, I don't think you always need to be super passionate. I'm curious what your opinion is on this, but like, do you think you have to be super passionate, super problem driven to just like start a business, or does it make a difference? And we're going to dive into maybe the difference of like venture-backed companies and small businesses and things like that. But like, is all that really needed to start a business?
I think it is beneficial, because if you are going to quit your job, you know, pour savings into something, wake up every day, work long hours for very little pay or no pay for some time, it has to be something that I hope you really care about. And I think in your case, it was something that you knew a lot about. And whatever you did in the space, you had, I think, the confidence to figure something out and to understand that there was a market and there was an opportunity for this. And you had done this for an extended period of time and thought that you could probably do it better than you were seeing it done. And I think that is like what we look for in entrepreneurs, as like some sort of a lived experience, a unique perspective, and something like you've been there, you've done that, you understand that there are ways that you could, you know, uniquely differentiate yourself from doing something differently. And even if that is starting and not realizing who you're doing this for, but then figuring out who you're doing it for, and that's what's going to keep you sustainable and to continue growing and to now be here 8 years later.
Right. And I may be like, I mean, you know, I guess I'm faking the funk a little bit, because I do have passion about e-commerce, and I have passion about business in general, marketing, digital marketing. So it's just like, I am passionate about something. So I guess I
remember you joking about that. You're like, I don't have a passion for fashion. We would all laugh, but you're like, but Steve, you're in this business.
I don't tell too many people that. They still don't know that. But
cut that out.
It's an interesting thing. But like, but no, what you're saying is true. And like I said, I think the main thing is that I do have a passion for what I do. And like that wakes me up. It's just like, it was just a vehicle. What I was selling or whatever was just a vehicle to kind of get there. So, so we're going to kind of speed it up, because we're going to really dive into the venture capital world of things. And so that leads me to your current place is a Slauson Co. And can you talk on what that is? What made you, just a Cliff Notes version, I guess, of what got you there from Grid110? Then we'll kind of dive deeper into the, this topic of venture capital.
So Slauson Co. is a early stage venture capital firm. We invest in pre-seed and seed, which is typically the earliest stage of startup businesses. They might have a product, they may have customers. So when you think about, like, you're hearing about companies that are kind of just getting started, and maybe they've raised, $500,000, $1 million. It's kind of in that stage of business. So we are taking very risky bets on very early entrepreneurs that maybe have not proven themselves yet, or maybe they have with previous businesses. But it's like, it's a very, in like the scale and spectrum of investing in companies, because you hear about, like Uber just raised, or, IPO'd, or all of that. This is the early, like the kindergarten stage. This is not college or grad school. And so a lot of these companies are really still figuring themselves out, may not know who their customers are. But they have, at least the founders that we invest in, have a very deep kind of lived experience in the space that they are building in. And so it's a $150 million fund that are led by two really incredible general partners, AJ Roland and Austin Clements, who Austin. And they are childhood friends who grew up right off of Slauson, which is the namesake for the firm. And the firm is really rooted in economic inclusion and deeply believes that investing in a wider array of people creates more opportunities for more people. And the vehicle that we want to do this with is by investing in companies in the venture capital space. And happy to dive into like what is VC and like all of that.
Let's maybe, for our audience, and I think what is VC. Let's just talk about what is venture capital. Like, what separates it from me just going to the bank and say, I want to start a business, give me some money.
Yeah. So I think when you think about just the investing landscape in general, I imagine many of us put money in a bank and got a savings account, and you're unfortunately generating 0.25% interest on that. Probably the worst investment that
you might be up now with these interest rates.
Yeah, well,
a little bit, slightly.
I know mine. I have an online bank account. It's like 4%.
Oh, you will.
So that's probably the least risky investment that you could make. You could be investing in real estate, buying a house. So you're putting money into something with the hopes that it will appreciate in value and increase the value of that. People have done it with stocks, which is also risky. They've done it with 401ks. So there's a number of ways that you can invest your money into something. And with venture capital, it's a way for people to invest in private businesses. And there are very limited ways that you can do that. And the idea is, I'm going to give you money with the expectation that money is going to be returned to me like tenfold. And over a period, like a 7 to 10 year period of time. And it means that you have to grow your business very quickly in a very short period of time in order to get that type of outcome. And the only way that I get my money back is if you go public and are listed on the stock exchange, or if you get acquired. So there's typically only two outcomes where I get to see a benefit from that investment. And
very risky.
It is very risky. Yeah. The majority of people lose their money through that way. But it is with the risk of, we're going to invest in, let's say, 100 companies over the lifespan of, a couple of funds. We have baked in kind of like the financial model of it that many of them will fail. Some of them might just return the money back to us through an outcome. And a couple of them will have will be like an Uber, a Lyft, a large company, and will return kind of this 100-fold back to the fund. And then that money is actually the original money, the source of that money is pooled from other people. So venture capital firms are fund managers. So just like, hedge funds and like people, if you have a financial manager or somebody who's managing your money, we're managing other people's money. And it can be university endowments, it could be pension funds. Again, people just diversifying where they're putting their millions and billions of dollars.
And are they am I getting a statement saying, Slauson Co is because it takes a while for some of these companies to develop. Is it just pretty much like I've invested into XYZ, or is it like, this company A has had 10 sales this month, here's the report? So
we actually do, we're kind of required to report back to our investors. We do it, I think, on a quarterly basis. And I'm sure there's financial reporting in terms of the value of, we have a $150 million fund, and how is that increased based off of our investments and the valuations of the companies that we've invested in. So, if we invest in you at the earliest stage and you are continuing to grow, and then you raise more money, and then you continue to grow and you raise more money, typically that's done, the value of your company, your valuation increases. And so then the valuation of our fund and the pool of money that we have increases, and we report on that back to our investors, which are called limited partners.
Okay, well, so it's great because I hear that and it's still bringing back. For me personally, I've always had, I've been on the fence of VC world for a long time.
We talked about this.
Yes, several times. And I've always been scared of hearing it. And I think not necessarily scared, but I didn't know if I fit that mold as a founder. And what does that look like? Because it's a big, this is a question I had down the line. And for example, with the 9%, in the stat there, it's like there's only 9% of established business in America. And the established business is a business that pays itself or pays the owners or somebody else for 3 straight years, which is very hard to do.
It's very hard to do.
And it's only 9% out there. And then you take the small percentage of people that actually get VC funding, which is, I don't know, the percentage of that?
It's like 0.05% of all businesses.
Okay. Well, okay. Very, very, very small. You got a better chance of getting to the NBA. So how is it that, what does a business look like? Because I don't know if there was a long time when I was like, I felt like I was doing great things and very fast and like just naturally kind of getting it. But whenever I would have these talks to either investors or people in that space, it would make me feel so small where I was like, I don't think I'm that.
Yeah.
And it's like, so what exactly does that company look like to you guys at that beginning stage?
Yeah. And I think the biggest issue that I have with founders who are kind of getting into the space and understanding venture capital and maybe trying to pursue it and then hearing that type of thing is it doesn't mean that there's anything wrong with the business that you're building or the trajectory that your path is on. I think a lot of people mistake, getting investment, getting venture capital, seeing the headlines on TechCrunch and all of that as that's a success, like the metric of success, right? I've made it because I got this money. And that's not true at all. Like, I think you've made it if your business is able to grow and sustain. And we talked about, like profitability and being able to be sustainable and be around for 3 years, pay yourself, be around for 8 years, pay yourself. I think with venture capital, it's a means of pouring gasoline onto something to help it accelerate and grow. And that acceleration in that short period of time really is like the defining aspect of venture capital. Sadly, there's like a growth at all cost mentality of you just need to grow, bigger, because the idea is you hear the concept of a unicorn, which is a company that's worth $1 billion. And there are only a handful of those types of companies. It's very hard to do. And it's really interesting that this whole industry is focused on that when so few companies actually get to that point. But that's where, that's the end goal is to get there. And not many companies can get there. Not many companies can sustain getting there. All the things that break along the way, the type of company that you start has to become a very different company to get there. And maybe it's not the company that you wanted to start or want to continue running, or it just changes a lot of things. It changes the culture, the fabric, the DNA of a company. And it's not to say that it's not a bad thing, but it just means it's a very specific type of business that can do that. Typically technology, typically software, because it means that you're not manufacturing things to get to that scale. It's something that can scale very quickly with fewer resources. And so when companies are thinking about, do I want to go this route or not, it's really understanding the expectations that when you take this money, when you have an investor, the expectations that they have of you. It's not like, here's a check, good luck to you. It's here's a check, now I want to see your performance and let's talk every month and grow. You're not growing fast enough, grow faster, lay off people, all these things. And so I think it's just once people actually understand how venture capitalists actually make money and what the expectations are of I'm looking at you as an investment, but you need to be able to become $1 billion company and return my entire fund so I can make my investors happy.
I mean, so it seems like it's a lot of stuff that people just don't know what they don't know when they're thinking about if I got a business idea and you see these sexy headlines out there and I don't got $1 to my name or I don't got the money to start it. And you think you have to go this route or just that's how I raise money. Then you hear banks aren't giving nobody no money, startups money. That's not happening either. So do you think, how is a founder supposed to learn about this space, know what they're getting into, that's the time they want to invest the time of getting PowerPoints together and pitching and going because that's time in itself.
Right.
And I remember one time you were part of the Grid110 program, we had I think it was some investors or some girl, they was giving us a spiel about stuff. And I talked to some guy at the end and he, once he found out about the business, he was excited and stuff too. But I was just I'm busy. I don't even got time to do a pitch deck. I got other stuff going, and he was just don't worry about it. You that's good. Don't and so, but it's a weird thing because a lot of people are focusing so much on pitching and trying to raise money. When do they know that's the route they should go? Or how do they find out more about it? Because I think it's more than just a Google search. Because even on Google, you'll find a bunch of sexy stuff. So I mean, how does someone really know what they're getting into or knowing that's the route they want to take?
Yeah. Well, I think, you've mentioned Grid110 a couple of times. So I think immersing yourself in the space and trying to learn as much as you can. I think people can definitely and have started businesses without being parts of programs or communities, or without knowing any other entrepreneurs. But I think you are almost recreating the wheel in a sense if you're trying to go about it going solo. Like, it's a very isolating experience. There are so many shortcuts or things that probably you could have done faster had you learned it from somebody else. There are lots of resources that are online. You can now study it in college. But I think it's like seeking out those types of resources. You can do very quick Google searches. There are online programs, podcasts. Like, there are so many things that are talking about this these days. And so I think that there's definitely a kind of like step-by-step things. But I think the first thing to really do is to determine like what it is that you're trying to like solve for, and talk to as many people about that as possible. I think a lot of people focus on the like, let me put together a pitch deck and I'm going to pitch and I'm going to get some money, versus actually like the thing that you want to build and seeing if there's a there in the first place. Do you even, should you waste your time on this? Talk to people about kind of the problems that they are facing. And how big is this problem? How are you solving this problem right now? What are you using? Are you manually solving it? Is there something else? Do you not like that thing that you're using? And then, so if you're thinking about building something in that space, just understand as much as possible about what currently exists in there. And how could you be better, different? How could you then build something, a prototype, cobble something together? I think in this day and age, there are so many no-code tools. You could just do Wizard of Oz in Google Sheets behind a Squarespace website to do something. I think there's so many options for starting something or creating something just to see if there's interest. You could create just like a quick landing page and collect email addresses. Right. And then based off of that, you're like, oh, there's actually a lot of interest in this. Maybe I'll do some polls. Maybe I'll do some, surveys, focus group, whatever. So I think the most important thing that you can do is really that groundwork research to determine, should you even be spending your time on doing this before you even start thinking about fundraising, pitch decks, and like all of that stuff.
So, that sounds like traction, and
yes.
Getting that going. But at what point, and maybe this leads to like what type of company, maybe you could speak on what type of company that Slauson Co looks for. Because I know every VC firm is different. Like, you might be pitching to a VC firm, you sound great, but they don't care about your business or your industry. And so, I guess one is like, what type of businesses does Slauson Co look for? And then two, like, when that there is there, like, how do y'all know it's there? Mm-hmm. Or like, what's, and I don't know if you're, I'm sure your opinion is very highly, somebody you want somebody to invest into a company, being Miki's good friend definitely helps. But like, what makes a company get through that door and get a yes when there's also a lot of no's at that stage? Yeah,
and I feel like it's getting harder and harder. I think the goalposts keep moving for entrepreneurs. We talked about, we invested pre-seed and seed. There was a point where the term pre-seed didn't exist. It was just seed. And now, because the goalposts have moved and because the investment rounds have gotten larger, now there's this like pre-seed area. I run a program called Friends and Family, which is even earlier than that. So there's the concept of the Friends and Family round, that when you're first starting a business, that when you were starting Perfect Tux, should go around to your family and be like, hey, I'm going to start this company. Do you have $5, $10, $15, $20,000 that you could give me, loan me, whatever it might be, to help me start this business if I don't have the money myself? And this is a very common term and concept and like stage of money, but like most people can't.
I didn't have that friends or family. I'm still looking for that. Yeah. I think I have become that friend for some people, and I'm like, Magic Johnson.
Yeah, but it's like a known term, and it's kind of laughable because, especially for underrepresented founders, founders of color, Black founders, women founders, where immigrant founders, where that, I cannot ask my parents for that.
The network just ain't there.
No, it's not. Yeah. And also it's like, they'd probably laugh and be like, well, what are you doing? And where's this money going to go? And so the concept is really interesting, but so we're really trying to reframe the concept around, what if you had that? And what if you had people that believed in you and the resources and the education and the community and the support and the capital to help you start this thing that you're thinking about doing. And so we're working with entrepreneurs, ideas, they have an idea for something. And for us, it's really looking at them and being like, all we have to go on is you as the person and your background and your experience. And so we look really closely at what your lived experience looks like. And so when I mentioned, before with you, that you had this extensive experience in e-commerce. And so that's why I would have taken a bet on you, because even if you don't have the strong connection to fashion, like you have the business sense and you worked in that particular space before, and you probably identified ways that you could do it better and shortcuts, and you had the relationships and like all of those things. So whereas somebody who's just getting started, who has no background in that, probably wouldn't know the first place to start. And you have saved yourself years of time doing that. And so that's what we look for. We look for people who have a very unique lived experience in the space that they're building in. And typically it's maybe they've worked in the space before and they've identified inefficiencies, problems, gaps, like things that they want to solve for that nobody else is solving for right now or not solving well. And they feel like they are the person to do it. And they can, they have the relationships, they have the innate knowledge, and it's something that they care very deeply about. And so that's really all we have to go on and the thing that we have to trust in the most.
Yeah, yeah. Well, I'm curious. So what is those traits or attributes in those businesses? And you've seen a lot of businesses in a while now where you've been able to see businesses maybe get to some investment or get to, maybe 10 years or 8 years here or whatever the case may be. Like, what is some attributes that you've seen in the people that are successful? Maybe not even like unicorn successful, just like you created something.
Yeah.
What traits does that look like? And then is it possible to recognize that early, or you kind of got to give somebody that time to got to get there?
Yeah. I think that's where storytelling can be really helpful for an entrepreneur, of the ability to kind of share things about them that make them feel like they are the person to bet on, and why are they uniquely positioned to do this thing, and what their strengths are. And I think the things that we've seen in founders is just one, resourcefulness. And so being able to do a lot with very little, maybe no funding, favors, convincing people to do things just for equity versus paying for them, trading things, or setting out a vision that they believe in and getting people and listing people in that vision and being excited about that and wanting to come on board and help them and support them and be a team player in that. So I think the resourcefulness of, building something on Squarespace and like just cobbling something that, even if it's not perfect, it's not pretty, but it does what it's supposed to do. Right. And it shows the traction, and it shows that there are customers that want to pay for this thing, or that are waiting, like eagerly waiting on a wait list for something because they're like, oh my God, finally somebody is building this. So I think the resourcefulness of just being able to build something out of nothing with very little resources, and to just figure shit out. Mm-hmm. And I think that people have been doing that for years. And I think people, especially that don't have the means, that don't have the access, that don't have the network, they just figure out how to do it. And I think that is a talent, that is a skill. It is very hard to teach. But it's something that from a lived experience perspective, like you've just done all your life, or you've seen people do around you. And so, that's the only way from a survival standpoint, from an opportunity standpoint. So I think resourcefulness is one thing. We joked about, we called Grid110 founders gritties, but grit, I think, again, along with resourcefulness of just the sheer will to get something done, regardless of whatever circumstances. I mean, again, watching your story of surviving and navigating the pandemic, of your primary
PTSD, whatever they call that. That's still
your primary customer base evaporated.
Yeah.
And you're still here because you figured out how to navigate all of that. So that's not stuff that you're taught. There's no playbooks for that. You just figured it out, as did a number of people. And so I think those types of things, if there are ways that you can communicate, how you've been able to navigate and do all of that. I think just being authentic to yourself. And again, I mentioned the being able to kind of detail out the vision that you have. It's really enlisting and enrolling people in that vision. You're it's pretty sales. And it's like, we want you to come along for this ride because we're going to do this. And this is where we're going to take this. And even though that's not where we're at today, that's where we're going to be at some point. Yeah.
It's crazy because, I feel like I was an entrepreneur before I knew what an entrepreneur was. Like, talking back in the early internet days, like I was doing e-commerce before I even knew what e-commerce was.
Well, even as a musician, that's being an entrepreneur.
Right. But all this stuff I've ever done, I just called it hustling. And just figuring out, just figuring out a way. Then it turned into bootstrapping and all these fancy terms. But I kind of tend, I've told people in the past, like especially for like Black folks, I'm like we have like a natural hustle, and I just feel like if it's like invested into, it's something. So is that almost where Slauson Co kind of comes from, with like, we're going to invest into underrepresented founders, and because we believe in, we have our own experience of like this hustle and grind, and we just give them a little bit, like Lord knows where they could run with it. So
we don't explicitly invest in underrepresented founders. We feel like we invest in the best founders that we find that are investing in kind of the industries and the spaces that we have determined are where we want to focus on, because we feel like that's how we can push economic inclusion forward. It just so happens to be also that the majority of the founders, I think like 95% of our portfolio or something like that, people of color, Black founders, Latino founders, LGBTQ women. And I think for that reason, it's people that have been overlooked and underserved and under-resourced, who have this just innate grit and sheer will to persevere and move forward, and can do a lot, are used to doing a lot with very little. So imagine what they could do with $1 million check. Yeah. And how much further they will go, how much faster they will go with not just the capital, but the support, the resources, the connection.
Well, I'm curious if, and not that you guys only, don't only specifically target a certain group, but have you, since you obviously, even with the Grid110 experience and seeing Slauson Co, and how many years Slauson Co been investing?
I think like 3.5.
So I don't know if they've got to a point where you can kind of really see like, results and things like that. But like, have you started to see, like, is there a premise that's the thesis of that grind is translating to something? Or is it like, I also know a whole bunch of Black folks that ain't got it, like I give some advice and it's like, you ain't following nothing. You see what I've done and I can give you some advice and you still ain't running with it, let alone if I give you a check. Yeah. So it's like, is that actually translating, or is it like, are you finding anything about like, okay, well maybe y'all just the same as them. Like now that y'all have to network, it's a little different, but just the same as this white person there, it's hard for them too. Like, I mean, are you starting to see any trends, or is it like, or is the thesis of like, oh, they're knocking it out the park and it's going? Yeah. Like,
I think the things that we're seeing is that people that are the closest to problems are the people that we should be investing in, supporting, and moving forward, because they understand things in a very unique perspective that other people don't. And so when you have this lived experience of whether it's an industry that you are in, or a cultural understanding of something, and as we are moving, the country is shifting towards a much more diverse, where I think it's by the year 2040, 2050, the minority will be the majority. And so we're moving towards this direction. That means that who is spending and the consumers are going to be shifting in that direction too. So the people that actually hold like the spending power will be shifting. Who's going to be creating products and services for them? It has to be people that they trust, that understand, from hair care to skin care to cultural trends and things. There's a trust in like the authenticity of who is creating those things. And the unique understanding of, what you need, when you need it, why you need it. And I think that those are the people that we should be, one, listening to and investing in and supporting, because they're going to be uncovering the most massive opportunities as we're moving forwards.
What would you say as a whole, and obviously this is all like I said, we keep it 100 around here. It's 0.5%. So don't be over here just because we said something. Don't be, we putting that I put that the asterisk there because I want to ask, like, are other firms or these firms that never really invested in diversity, are they starting to see this? Because they have to start seeing these trends too with the nation population, all this type of stuff. Are you seeing it just an overall industry-wide thing? Like, is there a shift happening, or is it still the same good old boys club?
Yeah. The last year has been really interesting to see. I think the last several, like 4 or 5 years, we have seen more funds, efforts, funding that are, especially since 2020, that were targeted towards underrepresented communities, in particular the Black community, Black founders. And it was just part of the reckoning that happened with the summer of 2020 and post the murder of George Floyd, and all of these corporations saying, we're going to do better and we're going to, pledge X millions, billions of dollars. And some of them lived up to it, but there's been a decline since then, and it hasn't been as consistent. And we've seen more venture funds that are, we invest in diverse founders, we invest in immigrant founders, we invest in Black founders. But in the last year or so, certain groups, organizations, they don't like that. And
I was going to ask this question.
And there have been lawsuits towards Fearless Fund, which is a Black woman-led venture capital firm that had a grant program specifically for Black women founders. And there's a current pending lawsuit against them for discrimination about that. They have gone after, similar organizations have gone after other types of funds, organizations, because they only focus on women, or they're only focusing on maybe a fellowship program to help diversify the venture capital industry, and they're only looking at maybe Black or Latinx fellows. And so people are feeling excluded, and they're feeling a certain type of way about that. And
that's crazy how, no one ever asked a question of like why this had to be created in the first place to but since that is the reality, has that changed anything with you guys, or just obviously, I don't know, like I said, it might have never been from the jump. I thought from the jump that was a purpose for we were going to look out for underrepresented founders and things like that. But has it changed how you guys have to, what you put on your website, or how you attack, or you guys specifically?
Not for us, because our focus is economic inclusion. We want everybody to feel included. And so when we look at potential deals, founders, we'll look at everything. And we've been really specific around what types of companies are a good fit for us. So we're not saying a founder is or isn't a good fit. We look at the company, and if you're in this stage and you're raising this amount of money and you're in kind of this industry or this industry, and that's kind of the bare minimum that we'll look at. And then all other bunch of different factors that play into that. But there has never been a quota for us. It's never been a requirement. It is something that we track, because we do want to be able to report back on that. And because we're thinking through just what does economic inclusion mean? And we want to be able to have numbers that show kind of what does the industry look like, and what do we look like? And if we are successful, it's because we invested in this group of founders. Yeah. And so y'all should be doing that too.
You know what? I think it hopefully is going to get to a place where everybody just gives everybody a shot. I think that's what it comes down to. But on the flip side, I will say, for being a business owner and being on the other side of things, I started finding my own biases and my own little, I'm like, can I be racist? And it's little things for example, our website is pretty Black. We got a lot of Black models on there. No, we don't got a lot of Black models. We just got 1 or 2, and they happen to be Black. But what I realized is your network. I first had black models because I knew Black people, and I was I didn't have money for some. Hey friend, can you bring your kid over here? He happened to be Black because that's who I know. And they would do it for free real quick and, get some snapshots. Or when I first started hiring, I started realizing, oh my gosh, I do have biases. Somebody walking through the door, I'm reading them already. Or I want them to kind of be young and hip and I'm like, oh my gosh, would I not hire my mom? It's real things. And it's I think it's really when you can be aware of that. and enough to be aware of it where you can stop yourself and say, no, let me give them a shot.
Yeah.
Or like, let me do whatever. Or that, like, this is like, I'm no longer like, I've always said, I'm just put me in the game. I'm gonna play by the same rules you playing by. Why I'm gonna do what you want to do. Like now I own a home and I have neighbors and I could go outside and check the mail and like, hey, you're this president of this company, just regular talk stuff that I never thought I would be in. But it's like, so I can see where maybe someone from a different community could be like, oh, y'all discriminate against me. Like I'm just born. Like, I didn't know, or my dad knows this person. Like it's not, and it's like you can't necessarily take it out on them. But on the flip side, it's like we all don't start at the same starting block. Yeah. So, but I'm hoping it gets to a point where it's just like everybody recognizes their biases and everybody can like act upon it.
Yeah, I think everybody probably has some level of unconscious bias, right? Mm-hmm. And I think to your point, it's like recognizing that and how do you act differently. Or just be mindful of it. And should you act differently? And are there ways that you can change that or just be more aware of it and how you move and the impacts that might have?
Yeah. Okay. I'm going to shift it a little bit and I really want to dive into some pet peeves that I have in the founders of the startup world or startup community. Well, let me first ask this one. What is the difference between a startup and a small business and what they say? Some people say lifestyle business. Right. And I feel like they be trying to be disrespectful when they say that sometimes. But like, is a small business a startup? Or, do I need to start Facebook? Like, how do you define these terms?
I think people define those terms differently. I think sometimes they're often used interchangeably as well. And I think the way that I look at it is, I think that the SBA, the Small Business Association, like the federal governing body of small businesses, defines a small business as, I think it's having under 200 employees.
Yeah, which is a lot.
That's a lot. And we talked about the 9% having at least 5?
No, it's like, it could be just paying yourself, but like, I think I was looking at it the other day, like there's like literally 4 to 6% of businesses, period, that own, that hire other people.
Yeah.
Like it's
it's not a lot. Yeah. And I think a lot of people maybe get that. So I think a lot of businesses are small businesses. There's nothing small about the business. It's just a term, right? The way that I think about a startup is, yes, there is some sort of maybe a connotation around technology or innovation, something that is new or different than what currently exists. And it's something that you are kind of breathing life into the world. And I think that there is a certain point where a company maybe no longer is considered a startup because it's grown out of that stage. I don't know that people consider Uber or Hulu or Netflix to be a startup anymore. They're a tech company. They are probably the elite Google, right? The elite of the tech corporations now. But at one point, they were a startup. They were started in someone's garage or in some small office. And it took a lot of time and money and resources to get to where they are today, a lot of customers to get there. But I think they were probably considered by the definition as a small business at one point. But I think that, when you think about small businesses, I think a lot of people think about mom and pop, retail locations, places that have like a physical presence. Maybe they've been around for years and years. I think that's what a lot of people think of when you think of small business. It could also just be one person who is running an e-commerce store or selling things at the farmer's market or at a fair or something like that. So I think that there's a lot of ways that people look at it. And I think that, what was the other question that you asked about?
Lifestyle. What's a lifestyle business?
Yeah, it's such an interesting term. I think when people think about the types of businesses that you can build and like the direction that you want to take it, it's really thinking about how big of a business do you want to build and kind of like the rules that you want to play by when you're building that business. It's also who do you want to be reporting to. So when you take on an investment and so you go the venture scale route, you're thinking about building a very large company. Again, that like $1 billion kind of exit outcome, lots of transactions, fast growth in a very short period of time. But you also have now all of these other stakeholders. So you have your customers, and any business, the customer will always be like kind of the number one stakeholder. But now you have investors, you have board members, you have other people that are kind of dictating what you should and shouldn't be doing with your business, giving you advice, but they also have an ownership claim in your company. Like you've given up equity for exchange for that investment. Right. You are no longer the sole owner of that company. So other people, their thoughts and opinions matter. You could get fired from your role as the founder of the company if you don't have enough control, right?
Yeah.
But with a lifestyle business, and I really don't like that term, and I don't know that there's anything else. I think about it as like a sustainable growth company. It's how can you build a company and you want it to sustain for like healthy. Yeah. You're focused on profitability, and you can make the rules of the type of business that you want to build, how fast you want that company to grow or not grow. Like we were talking earlier about kind of you comparing sales and revenue numbers from last year and how they've grown year over year, and it's slowed down a little bit. But like if you were building a venture scale business, we would expect that to be like 10% month over month continuously, keep growing. It's like the hockey stick growth chart, right? But you can do with a lifestyle business, you're maybe more focused on like incremental growth or sustainable growth, and you're focused on, I want to be profitable. I want to be able to put money back into the business. I want to invest it in other areas.
Well, let me talk on the profitable thing. This is my other pet peeve, because I've been at plenty of little networking things or conferences and stuff, and sometimes I hear people talk, and there's certain things that like I hear of these large venture-backed companies, and they might say a user number, or maybe they might whisper a revenue number, and I'm like, I'm killing that. Like, why are you why are you on the stage talking? And then it gets me to the point where I'm like, the more I've dived into it, is like this culture of like raising money, growing fast. And granted, I didn't go to business school. Heck, I didn't even finish college. So I don't know, maybe a bunch of people that know how to run a business. But I feel like there are lots of people that don't know the structure or the fundamentals of running a business. And it's like, if you run out of that money or run out of that runway, you have no clue. You're out of business. It's not because your customers said you're out of business. You're out of business because you're an investor, or you can't raise any more money. Like, where is that thing of like what's more important? To know how to run a business, to be profitable, or to be just, I don't know. I mean, just, we got a lot of users. I mean, users is good, don't get me wrong. I would be happy with users, but just like the people that just can't sell anything.
Yeah. I think the last year and a half, 2 years, partially because of what's happened in the economy, post-pandemic, there's been a needed reckoning in the venture capital industry, where 2021 might have been the last year where you were seeing, people could raise money on just a pitch deck, just an idea, millions and millions of dollars, and then like gone because they couldn't figure out if there was a there, if they were building something people actually wanted, they couldn't get customers, but there was just insane amount of belief in this person because they had the background, the pedigree, this insanely ambitious idea. And again, it's taking a risk on somebody. And a lot of that got right-sized in the last year and a half or so, because the way that the economy was going, there was fear around making maybe new investments and things, but because making sure that your existing companies that you had invested in were going to be okay, that they could survive. So maybe you're being more conservative with your money and putting it back into the companies that you had already invested in, because you've already taken a bet on them. Like, you want them to survive. You don't really care about necessarily the new investments. And the sizes of the valuations and like things have shifted in the last year. And there was very much a focus on cut your burn, so that if you're spending all of this money, if you have inflated headcount, all of these things, cut your burn so that you can extend the runway that you have, because there might not be another check for you. So you need to figure out, how can you generate more revenue? How can you get towards profitability? So there has been more of a focus on building like...
Is that a hard switch?
Healthier, when you're used to kind of just throwing money at advertising, especially if you have a consumer-focused company and the only way to reach them is through paid advertising, and you're used to just dumping money into that and trying to acquire customers and trying to reduce the cost of acquiring that customer. And you have to shift that of, wait, so now we have to try and get more money out of the customers maybe that we do have, or maybe focusing the strategy around that. I think that was a big shift for a lot of people, because it's like the difference between growing top line and growing the new customers that you have and spending more money to acquire those customers, but you already acquired all of these customers. So you could probably get more out of them in different ways if you understood them a little bit better. But that is a different number and it's a different metric. And so I think it just really depends. And I think for me, I've always just focused on, like, our program specifically focused on helping, number one, helping businesses operationally advance their business. So making sure that you have a solid foundation, making sure you understand who your customers are, what their pain point is your solution, your product solving that pain point? How much will they pay for that? You know, is it better than anything else that exists out there? How can you, like, actually start acquiring those customers, showing traction, building the product if you haven't already, even if it's cobbling something together, even if it's Google Sheets, you know, Wizard of Ozing it.
Right.
And so we really focus on that. And then we end the program talking about fundraising and access to capital. And now that you've built this thing and you've gotten some traction, you've gotten some movement, that you can show other people, hey, people actually want what I have, and we've been able to prove it, and we can show you because of these numbers, then people will be more interested in being like, oh, you actually have something. You know, it's not just an idea, it's not just thin air, that there's a there, and I think if you had a little bit more resources, money, et cetera, you'd probably be able to move a lot faster. So venture capital is really seen as, like, they call it jet fuel, of like you're really accelerating something at a fast pace. So going back to kind of like the lifestyle business, if you're driving a Honda Accord, nothing wrong with a Honda Accord, I have a Honda. You don't pour jet fuel into a Honda, you pour a specific type of gasoline into it. And it's only supposed to go, 70, 80 miles an hour. But if you are on a different trajectory and trying to go to the moon, you need a very different type of fuel to get to that direction. So
by the time people get done with the program, the friends and family obviously you guys are in the business of adventure, so that's what you're looking for. But are you okay with some companies coming out of that saying, oh, we want to be a lifestyle business, we want to do this?
I think it's an opportunity, because some people maybe aren't really sure of what is the right path for them, or maybe they think that they want to go maybe they think that they're building the jet, the spaceship, and then when they understand the expectations and what it takes to build that type of thing, maybe their perspective might shift, and that's okay.
Yeah.
And I think we want them to realize, so that they don't burn themselves into the ground trying to, push themselves in a direction that it's not natural. It's not a natural fit. It's kind of outside of what they maybe had intended or what their company should be. And if we can build more sustainable companies that continue to exist, that can employ people, that can solve problems for people, that I think is still a win.
Yeah. Well, I gotta cut this short. I'm so depressed. I'm gonna get one last question, and I guess I'm trying not to get that cliche, like what advice would you give? But like what strategies do you have for that? Maybe someone that got some traction, and that thinks they want to go the VC route. Mm-hmm. What would you say what strategies to attract your attention or Slauson Co's attention? I mean, what's the best ways there? Yeah,
I think most investors will take kind of cold inbound, right? So we all have websites. People will go through LinkedIn. We have a whole forum that anybody, if you're interested in pitching us and kind of presenting your company to us, you can go to our website, and we have a submit form, and we look at everything. And we will respond typically within like a week of, would love to have a conversation with you, or like, you're not a fit for XYZ reasons. And the same thing with our accelerator. We receive hundreds of applications. We look at all of them. Can't always give individualized feedback to everyone, but I think that putting yourself out there, I think, is the first step, right? Of just positioning yourself being able to articulate, like, what are you building? Why are you the person to do this? How are you different from anything else that's out there? What are you looking for when it comes to investors or support? Like, what do you need right now, besides maybe capital? And I think just practicing those reps, it's a sales mindset of, you are going to have to do a lot of cold calls. You're going to get a lot of no's. It's just like a continuous kind of repetitive cycle. Right. But being able to hone in on, okay, my sales materials, like if you get feedback on it, how can you tweak it? Are you talking to the right person? Are you talking to the decision maker? Are you pitching a company or a firm that does not invest in your space, in your stage, in your industry, et cetera? Like, most of us will have kind of our criteria on our websites of what we're looking for, who we invest in. We'll put out content on social media around that as well, giving you tips around that. So I think, a place to go is just like the Slauson Co Instagram, as well as YouTube. We're putting out just like educational content to help people who are just getting started. Like, how do you pitch us? What should you have in your pitch deck? How do you have a first meeting with us? What are people looking for? And so whether you're talking to us or you take that information, you're talking to somebody else. So I think there's tons of resources that are out there. One of my favorite kind of podcasts and on YouTube as well is The Pitch Show. And it's, entrepreneurs who are coming in front of a panel of investors, very similar to Shark Tank. Mm-hmm. And they're pitching their story and they're answering questions and they're getting feedback. And I think you learn so much just by watching other people talk about their business and how, kind of clearly they articulate what it is they're doing, the problem they're solving, who it's for, what their traction looks like. I think just immersing yourself in those spaces to understand, hearing the questions that people get asked, understanding how would you answer those questions. Right. I think those are all things that you can be doing to prepare yourself.
Yeah, that's great. That's all great stuff. I think if for an established business owner as myself, if I can give like some quick advice, if you're talking about advice, but I would say for a founder in a startup, a business owner, whatever the case may be, like, and thinking back to my own situation, like, don't think you're too small for the room. Mm-hmm. Or like, I know I found out what imposter syndrome was for the first time. I was like, oh my gosh, I have that. Like, this is crazy. But it's okay to just focus on what you're building and just build it out. And trust me, like, getting that traction, you'll find yourself ahead of a whole lot of other people. And it'll probably make those meetings a lot easier with that type of traction. So thank you so much, Miki, for joining us on the 9%. Thank you for being here.
My pleasure.
Everyone else, please like and subscribe. If you got some value out of this episode, please share it with somebody. Don't go hide and keep it to your own personal gym. Share the wealth with everybody, because that's why we're here. But until next time, we'll catch you on the 9% show. I will see you later. Peace.